Microsoft has been a leading technology company for over 40 years. It's quite incredible how long they've been in business and really that they've stayed relevant in every decade. Most recently, they are very relevant. They're a technology company that provides businesses and individuals a lot of the software that they run on their laptops, desktop computers, and a lot of businesses rely on their enterprise applications and technology. Gamers love the Xbox. It's just they're everywhere. The technology has a use case, and they're very big on artificial intelligence. They're a big player in AI, and they've benefited from that in the form of the stock price really going up in 2023. I'm going to evaluate Microsoft and determine where I think the company is valued, what I think each share is valued. I have a process I've developed for myself, and I'd like to share that with you. My name is Victor. I have an MBA, a lot of business experience, and I like sharing my analysis on YouTube. Do me a favor and like my video, and consider subscribing to my channel if you want to see videos like this. Now let me tell you more about Microsoft and my process. I've developed the process for myself to evaluate companies and determine if I want to buy their shares, just hold them, or potentially sell shares or not buy them at all. And it involves four key questions about a company, followed by a decision to buy, hold, or sell. And the first question that I want to know is, do I want to be a part owner in that business? Do I think that business is worth having? Do they have good barriers of entry into their industry? Does it tend to be a really profitable, high free cash flow generating business? Is the management team doing a really good job operating the company? Is debt under control and less than 3 times EBITDA? And I need a discount on the stock. I don't invest just to see my stock price stay the same or potentially go down. I want to invest. I'm a value investor. I want to invest when the stock price is lower than the value of the company. Then I could see my investment go up in value. And based on the answers to those questions, I decided whether to buy, hold, or sell. Microsoft is a software company that's gotten into other technology categories like hardware and now artificial intelligence. The software industry tends to be really profitable because if you develop the software and it has somewhat of a fixed cost, once you have the software built, you can sell it to millions of people, and the variable cost on that software is very low. And that's why in the first 10 years of Microsoft, when they went public, they created the wealthiest man in the world, Bill Gates, is because software tends to be really, really profitable. And since then, Microsoft's been a really valuable company. They've expanded beyond, desktop based software. They've gotten into the enterprise where they sell, big systems and big software platforms for businesses to use, like databases. Now, more recently, they've really migrated to the cloud effectively. They kind of moved all their products to the cloud. And what that means is what they used to once sell as a perpetual license, and that just means that you buy it once and then you own it, to a service where instead of owning it, you're somewhat renting it or paying a subscription similar to what you would pay with Netflix. And that transition has been really effective for Microsoft. And now they have a very strong subscription business. So overall, the business, I understand it. I like it. Very profitable. The industry is great. So I like the company and I like the industry. The company announced earnings a couple of weeks ago, and their fiscal year ends June 30th. So they were able to report their full year for what they call as fiscal year 2023. And what's really impressive is they grew 10% top line. The revenue grew 10%. That's great considering that Microsoft's such a big company. Additionally, you're looking at their profit is really growing. Their profit actually grew by 23%. So again, just phenomenal job by their management team. If you look at the 12 months, so I was showing the first 3 months, they grew at 10%, but for the full year, they grew at 11%, and their profitability grew 11%. So for a company the size of Microsoft, because they are now over a $200 billion revenue company, to grow at a 10, 11% rate is really impressive. Microsoft has a really strong balance sheet. They have more cash than they do debt. So really their net debt zero, because they could pay off all their debt immediately and then have a lot of cash left over. So in effect, they're well below my ratio. I like to see a company have less than 3 times EBITDA of debt. And really they're at zero debt. So they're well below the ratio I like to see. Microsoft generates a lot of cash from operations and a lot of free cash. The cash from operations did go down a little bit. It went down about $1.5 billion from 2022 to 2023. And their CapEx also went up, which means that their free cash flow went down overall by 9%. Not too worried about that. I think that a big investment that they're making is in AI. And AI requires a lot of compute, a lot of GPU capacity. So I'm sure they're investing in that so they can be an AI player. So overall, I'm not overly concerned with a 9% decrease, but it is worth keeping an eye on it to make sure that it's not a long-lasting trend that really reduces the free cash flow available to investors and available to the business, because that over the long haul would lower the valuation significantly. Based on my calculations, I believe that Microsoft currently selling at a premium of 17%. What that means is I think the company is really worth about $263 per share. But right now in the marketplace, the stock market, you can buy shares at $316. Therefore, it would be sold at a premium of 17%. How did I get to that number? I valued Microsoft using their free cash flows and also using their earnings per share. To cover free cash flows first, I'm taking their free cash flows that they generated in the fiscal year 2023 that just ended June 30th. That was $59.4 billion of free cash flow. I'm going to say that they're going to grow those free cash flows 4%. I'm being a little generous, but I think Microsoft deserves that type of treatment. You saw that their free cash flows were actually dropping by 9%. But I think over the long haul, they'll continue to grow those cash flows. For the first 4 years, they'll grow at 4%. And really their long-term growth, I'm also going to have at 4%. All cash flows after year 4 amount to roughly $1.98 trillion in free cash. All those cash flows that we expect in the future, I'm going to discount those by 7.5%, which is a low weighted average cost of capital. Microsoft has a very strong balance sheet. They've been in business for over 40 years. This is as solid as a company that you can look at. And when I discount all those free cash flows that we expect in the future, I get $1.59 trillion of value in Microsoft. I'm going to add the cash that they have on the balance sheet. They have $111 billion. They have $47 billion of debt. So you can see that they have lots of cash. The equity value I get after I add cash and take away debt is $1.659 trillion is the value of Microsoft. But right now, the market's valuing the company at $2.3 trillion. So using the free cash flow method, it shows that the company is actually being sold at a premium of 29%. What that means is that based on their free cash flows, each stock share should be priced at around $223, but the market is selling them for $316. Now, the earnings per share method yields a different number, more favorable, higher. The earnings per share that we expect for the current year is $10.96 per share. They deserve a nice high PE. It's Microsoft. They're showing growth. So it's a really good premium company. Expected growth of 4%. And based on this calculation here, I calculate that each share of Microsoft should be priced at $342 using the earnings per share method. But each share is being sold at $316. So it shows that there's a 8% discount on Microsoft when we use the earnings per share method. I blend the two methods, but I take more weight in the free cash flow method. I take basically 2/3 of this number, 1/3 of this number to get to a blended valuation of Microsoft. And I determined that for me, it's being sold at a 17% premium. So coming back to my process and taking Microsoft through my process, the first question, I would definitely want to be an owner in Microsoft, and I definitely want to be a part of this industry. The management team, excellent management team, doing a phenomenal job. They really have zero debt. So yeah, their balance sheet's super strong, but they don't offer a discount. And at the end of the day, I'm investing so that my hard-earned money can work for me and make me money. And I don't see how investing in Microsoft is going to make me a lot of money. Therefore, I would just be a holder of Microsoft. It's just a great company. I've owned Microsoft in the past. I owned it for a long time. And I have a lot of, respect and admiration for Microsoft. But at this time, they just don't offer that discount that I need in order for me to buy shares. Looking at where the Microsoft stock has traded for the last year, at the end of 2022, just about every stock was being, sold at a discount. And so was Microsoft. You could have picked up Microsoft in very late 2022 or early 2023, and really saw that stock price just, jump up. Part of it was the whole market has been doing really well in 2023 up until three weeks ago. So this stock would have done really well for you. It's up 32.1%. It pays 0.86% dividend. So you'd be doing fairly well if you had bought Microsoft at the very beginning of the year. The last 3 weeks, the stock has settled down quite a bit, but so have a lot of other stocks. Just about every stock in the tech space has been coming down because I think there was a little too much euphoria in stocks. My valuation of Microsoft's $263 per share. So the stock price currently, again, is about 18% higher than where I think the company's valued. But this is why I do the analysis, is so that I can determine at what point do I want to buy into these companies, especially really good companies like Microsoft that I would see myself holding for a long time. Buy it at a really good discount and then hold that stock for a long time. So that's Microsoft and where the stock price has been over the last year. Microsoft's one of 7 companies that are in the Magnificent Seven of companies that are the biggest companies in the stock market that have been doing really well in 2023. The companies include Apple, NVIDIA, Tesla, Google, Meta, and Amazon. And Microsoft's been doing really well, but it hasn't been keeping up with the other Magnificent Seven stocks. NVIDIA is just really taking the leadership spot. Meta's done great, and the others have really performed really well. So compared to what I think is their true peers, these really, really large companies, Microsoft's been a really good investment, but it's lagged the other companies in the Magnificent Seven category. So Microsoft is a great company. It's just the stock price is a little too high. And with regard to artificial intelligence, I think artificial intelligence is going to be a future business model for a lot of businesses, including Microsoft. What is that going to mean to Microsoft? I don't know. And anybody who says they know exactly what's going to happen, I would think twice about that. I think there is business models for businesses to license artificial intelligence, technology from Microsoft, but that just isn't real right now. And until I see real business models and I understand them, I'm not going to put my hard-earned money into a company just because there might be a chance that AI becomes a really important thing for Microsoft. I would think that if Microsoft was a good buy, there would be an extra incentive to buy the stock if they are really well positioned for AI. But AI itself, I'm not going to buy on the hype. I've been in the technology industry for a long time. I know software really well. I've worked for software companies. Therefore, I'm going to use that intuition that I have and just wait till I see real business models around AI. And I understand, who the players are going to be, who are the winners, who are the losers, and then make investing decisions on based on fact rather than just hearsay. So that's my video on Microsoft. I appreciate you watching, and do me a big favor and like my video and consider subscribing to my channel. Thank you very much, and good luck investing in 2023.